Welcome back, everyone, and thank you for joining the channel. Today we have some really interesting developments taking place in the crypto market, especially surrounding Cardano, ADA. Yesterday we closed with another green day for ADA, which honestly is not very surprising considering the overall momentum we are starting to see across the broader crypto market. When the market begins moving upward, it tends to lift many assets at the same time, and that rising tide effect is clearly starting to show again. More importantly, there is something bullish beginning to build on the charts that could potentially benefit ADA and the wider market if it plays out the way many analysts expect. Right now, we are actually seeing price levels that are the highest we have witnessed since January, which is a very significant development because this level has acted as resistance for quite some time and has repeatedly held the market back. This content is for informational and educational purposes only and should not be considered financial, investment, or trading advice. The views and opinions expressed are based on publicly available information and personal analysis at the time of recording and may change without notice. Cryptocurrency markets, including assets such as Bitcoin and Cardano, are highly volatile and involve significant risk. Always conduct your own research and consider consulting with a qualified financial advisor before making any investment decisions. The creator of this content is not responsible for any financial losses or decisions made based on the information provided. Investing in cryptocurrencies carries risk, and past performance does not guarantee future results. On top of that, we are also witnessing the first meaningful upward momentum that we have seen since November, which is another major signal that sentiment could be slowly shifting. Before we dive deeper into the technical setup, if you are new to the channel or you have been watching regularly, make sure you show your support whenever new content goes live here. At the moment, we are still seeing some green across the market, although it is relatively small. ADA is currently up around 0.1%, while Bitcoin, BTC, is up roughly 0.42%. The slight hesitation we are seeing right now is something we have experienced many times before because Bitcoin is still attempting to break out of its consolidation range between roughly $68,400 and $71,000. This is a range we have talked about heavily since the early part of this week. However, when we look at the charts more closely, we can clearly see that a bullish pattern is forming. Specifically, both ADA and BTC appear to be building what looks like a bullish pennant. If you examine the structure carefully, you can see the lower trend line acting as support and the upper trend line acting as resistance, gradually tightening the price action into a narrowing range. This type of formation usually signals that the market is preparing for a breakout, and based on the structure we are seeing, this pattern could reach its conclusion within the next 48 hours or so. I know we talk about the 48-hour window quite often when discussing potential breakouts, but in this case, the chart structure strongly suggests that by the end of this week or heading into the weekend, we may finally see a decisive move for both Bitcoin and Cardano. The reason this is considered a bullish pennant is because it formed after a rally, and typically that means the pattern acts as a continuation signal. If that scenario plays out, it could allow BTC and ADA to make a strong upward move that many investors have been patiently waiting for. Speaking of patience, many people in the community have been waiting months for stronger bullish momentum to return, and there are some additional indicators suggesting that sentiment is slowly improving. One of the most notable examples is the Crypto Fear and Greed Index, which has recently reached its highest level since January. Even though the index still sits within the fear range, it has climbed to around 28, which is the highest level recorded since January 28. That is a big shift because it shows that market sentiment is gradually moving away from extreme fear toward a more neutral environment. This does not necessarily mean we are about to see a massive boom immediately, but it does indicate that the tide may slowly be turning in favor of the bulls. Of course, there are still external factors creating uncertainty in the global markets and the crypto space. For example, The United States Department of Energy has indicated plans to release around 172 million barrels of oil from the Strategic Petroleum Reserve in an effort to stabilize global energy prices. The reason behind this decision is the ongoing geopolitical tensions affecting global oil supply routes and creating pressure on energy markets. Rising oil and gas prices can influence the broader financial system and risk assets, including cryptocurrencies. Because of that, any sudden developments could potentially impact the momentum we are seeing in the market right now. However, despite those uncertainties, there are also some very encouraging developments in terms of liquidity entering the crypto ecosystem. Recently, we have seen roughly $1 billion worth of Tether USDT minted, which represents fresh liquidity entering the market. Liquidity injections like this have been occurring consistently, and they play a key role in supporting market recoveries because they provide capital that can be deployed into digital assets. In addition to that, if we look at both USD Coin, USDC, and USDT flows, March has shown an interesting shift. As of the 12th of the month, this is the first time we have seen exchange inflows since November. Throughout the previous months, liquidity was steadily leaving exchanges, which is a pattern typically associated with the early stages of a bear market. Funds were being withdrawn, and capital was leaving trading platforms. But now we are starting to see that trend flatten and even reverse slightly, suggesting that investors may be returning to the market and actively buying the dip. This could explain why the market has been holding up relatively well despite the ongoing macroeconomic concerns. Of course, things can still change quickly. Escalations in geopolitical tensions could create more fear. Unexpected macroeconomic reports could pressure risk assets. And if the Federal Reserve adopts an extremely hawkish stance during upcoming policy discussions, that could lead to additional volatility and possibly more red across the crypto market. However, despite those risks, there are still some bright spots emerging in both the charts and the liquidity data. When analysts examine some of the more advanced cycle models, many of them suggest that if historical trends continue to play out, we could potentially see confirmation of bear market bottoms forming sometime around June. This is not guaranteed, of course, but it aligns with patterns we have observed in previous market cycles. Interestingly, Bitcoin is already starting to deviate slightly from the decline pattern that occurred back in 2022, which could indicate that the market structure this time developed differently. Ultimately, patience remains the most important factor for investors right now. The market is still navigating uncertainty, but the technical signals and liquidity trends suggest that momentum may slowly be shifting in a more positive direction. That is everything I have for you today. I truly appreciate all of you for watching and supporting the channel. Let know your thoughts down in the comments below. And if you found this analysis helpful, make sure to like the video and subscribe to the channel so you never miss future updates. Take care, and I will see you in the next one.